It's Rick. It's Friday, November 25th. Happy US Thanksgiving. Starting where we always do at our risk model, nothing's changed. Although we are getting closer to the 200-day moving average, particularly with the S&P 500. So it's going to be interesting over the next couple of weeks to see how we handle this area. But basically nothing changed in the model. I'm going to go review the charts in a second. I will later in this video. I'm going to show you there's a couple of stocks that are setting up for possible buy on Monday or perhaps Tuesday next week. So I'll review those with you. So, but first, let's just look at the market. So we always do. Here's the S&P 500. Again, we're mushing around in this area here beneath the 50 and the 200. But we're getting closer and closer to the 200, not because price is increasing, but just because of time. So we're getting a little bit closer to it. So I expect it's going to be a little whippiness in here over the next week, but so far looking positive. View is still lagging. A bit of a downer today. I think Apple was down. Yeah, Apple was down a couple of percent. So that was a drag on the NASDAQ. But it's still hanging above the 50-day moving average and it's trending up now. And the 21 is also moving up. So no real cause for concerns quite yet. The Dow continues to be the strong one of the bunch, just keeps on ripping up. So don't know what to make of this. A bit of a flight to quality, perhaps, to these big behemoth companies. They're getting a lot of investor money. So we'll see. It's kind of unusual. Usually only happens, the Dow outperforms the S&P and the Qs when the market is heading down. So is this a precursor or what may be going to happen? I don't know. We'll just let the charts tell us. I've had a pretty good run with my positions. I'll just quickly go through them before I get to potential new buys. Here's MGPI. That's the beverage alcohol company that I bought when it broke out of this base here. And it's had 7 consecutive days up. So I think it's getting a little extended. I took a quarter of my position off yesterday. No good reason other than I got 3-to-1 on that, and I just feel it's a little like overextended. So I wouldn't mind a pullback, so I can maybe add back to this position. Archer Daniels in on this break of this downtrend line. So it's tightening up quite nicely. I'm looking to add to this on a break over 98.35 would be a good position to add, a good spot to add. But we'll see. I like the way this is tightening up and on very low volume. You'd be expected with Thanksgiving, but still the volume is really tapered off. So not much supply coming to market. New position, Dollar General. Unfortunately, they have earnings next Thursday, so this one doesn't have a lot of time in right around here, so it's done nothing. It's basically where I bought it. So stop is down. Actually, my stop is way down here somewhere. So we've only got 3 days to make this work, and if we don't get a big move or hits the stop, it's going to get killed by Wednesday night because I'm not going to hold it over earnings. DK had that wild, I can't call it wild, but sort of a big volatile couple of days here, expanded the range. Now it's tightening up. So I did add to this position today. So with a stop down here. The fundamentals of this one looks fantastic. And so expecting a little bit more tightness here and then a blast through to new highs. Regeneron has done nothing. Still basing, getting tighter though. So this is looking good. So less volatility, again, no supply coming to market, the volume is down. I did the other day, I did recommend, when we were doing our scanning of the Canadian stocks, I came across Aritzia, and so I did buy it actually yesterday when it broke this downtrend channel here. It's done nothing. It's the same place where I paid for it. So I will see how. This is not a great pattern. It's not my preferred. So I just took a small position here, just more for giggles more than anything. And the stop is down here. Biotech ETF is still performing okay. It's mushing around, holding right at the 200-day moving average. I'm in from down here and sold half of it. And I've got a stop on half of it here and a half at break even. So just let this one ride. ISCC done nothing. It's doing beautifully, actually. It's doing exactly what I wanted to. If I drew this out the other day, I really wanted this to base and stay within a very tight range. You can see there's just no supply. There's no volume whatsoever. So I'm very hopeful this one's going to rip this way. I raised my stop to break even, so if it rolls over, I don't really care. But so this one's got high potential. I wouldn't buy it here necessarily unless it gets above here, 962. But then the next target is like $10, so it's really next logical target where it's going to stall out. PWR, I'm looking to add to this. I'm in here. I've exited 2/3 of my positions up in here when it failed to charge higher, but it's now showing strength again. So this is a really good pattern. So if it gets up here beyond north of 150, I'm going to look to maybe add to this one. And then the XLF financials just keeps trudging higher, so no complaints there. One I had HDSN. This one really annoys me. It had a nice rip today. It ripped up, came all the way back down, and then ripped back up again. And when you look at an intraday chart, and some strange reason, I put my stop at just a chicken shit, I guess. Put my stop back at break even. Sure enough, I got stopped out and immediately ran right back up again. So kind of stupid. Really should have stuck with my original stop, or at least, which was down here at $10, or at least put it in here at 1030, and I'd be up $500 or $600 here. But that's the way it goes. Okay, as for some new things to look at, first is an aerospace defense contractor, and I got a lot of wiggles on here. Let me take the moving averages off for now. Just clean this chart up a bit. So it ran up here back in July, August, ran up nicely, pulled back, and the pullback was about 16%, and then ran right back up, test the high, pulled back again, but this time the pullback was only 7%, which is precisely what you want to see. These pullbacks from the previous one are about half the size. Runs back up again, then pulls back again, and this time the pullback is only 5%. And then I was run up, tested it again for the 4th time, pulled back very slightly. I didn't do the math on this, but that's probably only about 2%. So what I'm going to do for Monday is I'm going to put a buy stop order if it goes above today's high, which is 163.41. So I'll probably put a buy stop order at 163.50, and my stop will be down here at 160.87. Now, a tool that I use to help me with these, which is on my desktop and I use it at all times, is a risk share size calculator. And just explain quickly how this works. Pardon me. So we start with the amount of capital you're willing to put at risk. For me, a full position would be $50,000, and a half would be 25. A quarter is obviously 12.5, and then half of that again is what I would call a pilot position, 62.50. And how I arrive at the math for a full position, my trading account is with the nickels and dimes, it's about $250,000. And in an ideal world, I would only want 5 positions. So I would want 5 full positions of 20% of my account. So 20% of 250 is 50. So that's a full position. If I don't have as much conviction, or the pattern isn't quite as good, or certainly if the market conditions are not very favorable, then I will max out at a half position. But right now I'm prepared to go to full positions. Out of my 8 or 9 open positions, all but one are in a profitable position. My unrealized paper profits are about 3% of my account, so I got money to play with, if that's the right terminology. And so things are going well, so I'm having a little more confidence. So that's how I determine my position size. So how I use this chart is I put in my stop price. So in this case, my stop is going to be below here. So it's 160.83. So I'll just round that to 160.8. Sometimes I'll put in 2 stops. I'll put, stop half my position here, maybe half down here. But in this case, if it takes out this low, this pattern is busted and needs to reset. So 1 stop is all I need. So I put this in twice. 160.80. My entry is above today's high, or even yesterday's high. So, which was 163.48. So let's say I can get in at 163.50. So that's my entry price. So simple math says I'm risking 1.7% on this trade. The risk in dollar terms between my entry price and my stop is $2.70. So how many shares, this tells me how many shares I can buy that will use up my the various amount of capital I want to allocate to this trade. So I can take a full position in this trade, 50 grand, and total risk, if I get stopped out, is only $826. So that well within my parameters. I don't like to see the risk in percentage terms for me to exceed 5%. I know Mark Minervini uses about 8%. He'll often take positions where he's got 7 or 8% risk. 5 is about high enough for me, because if you do the math on a $50,000 position, 5% is $2,500. In dollar terms, that's right about my max comfort level. So this is a quick and easy tool that I use, and I know a couple of you others use it. That determines how you set your position size. So I'll put a buy stop order in for 306 shares. I'll probably round it to 300, but often I will use odd numbers. So that'll be my buy stop order on this particular trade for Monday. The next one is PCVX. And this is what we call a power play. So it went from here at $22 and doubled to 44 in a very short period of time. And now it's been basing for 3, 6, 9, 12. Usually the minimum was 12 to 15 days. So it's meeting that criteria. And this is getting tighter and tighter and tighter, the ranges. So when it breaks out, presumably to the high side, this could have a big run. So my entry on this one would probably be above this trend line here, which would take it above, where are we? The high is 44.72. So let's say 44.75. So if I bring back my little tool, my entry price is 44.75. And where would I put my stops? Well, I put my stop underneath this bar right here, or perhaps safer would be under this bar here. So we're down at 42.16. So let's put the stop at 42.16. Goes below that, this thing is broken, and you need to be out. So this is a risk of 5.8%. So that's a little high for me. So I wouldn't take necessarily a full position. So let's say I adjust it, I put a stop on half of it at $43, or just under 43. So 40, to say, call it 42.96. And the stop remains the same, 42.12. Yeah. So now we're under 5%. We're 4.9%. We're right at my my uncle point, if you like. However, the upside of this one could be like enormous. So to me, it's worth the risk. But I would only go with a quarter to a half size position. I don't have the same conviction on this trade. So again, I'll be buying either 279 shares or 559. So at 559, I'd be risking $1,200. That's a pretty decent amount of risk, because if it does go up here and actually quickly fails, to be honest with you, I'm such a chicken that if it jumps out of here and there's first sign of failure intraday, then I'm going to be raising my stop, either my entry cost or underneath here somewhere. So I'm not going to endure the full amount of this risk. So that's how that one plays out. And then there's a third, ACRS. Again, a little bit more high risk trade. But again, it's come up here to the this is not an all-time high. This is a 52-week high. Came down. This is a nice pullback of, I don't know how many percent, but not a lot. Came back up here, came back to the same level. But this pullback here is a little disconcerting. So it has the capacity to just dump on you. So that's why we have stops. But now it's come back again. It actually poked its head through the 52-week high, pulled back, went back over, and now it's pulling back, but on really low volume. So my entry here would be again, drawing a downtrend line. It's a little awkward here, but actually I don't even, you can see it on the chart. My entry here will be a buy stop over and above today's high. So the high today was 1786. So let's say we're buying it at, let's go back over here. We're buying it at 1790. And our stop will be under today's low, which was 1744. So let's just say 1740. And it's only going to be one stop. So now my risk is 2.8%, well within my tolerance. So now I just have to determine how big a position I would want to put on. Again, because of like this big white bar that came down that day, these couple of days here, we could get faked out, and it could open up here and then just drop down again. So what happened to my tool? Oh, wrong one. There we go. So I want to keep this to no more than a half. I'd take a half position. I'm willing to risk $700 in this trade, because again, unless I was risking 2.8%, if it just gets back up to here, that's 5.8%. So it's well more than 2 to 1. And based on previous history, this could run back up into $24, $25. So it has some pretty good potential over the. So anyway, that's my approach to it. And I say how I use a handy dandy tool that keeps me out of trouble. So I'm not guessing. I don't just buy a flat 1,000 shares of something, or I always want to maintain my risk within the parameters that I've set. So I know what my dollar risk is, and then I know what my risk per trade is. And this is absolutely critical for those of you that are going to be entertaining or are right currently doing some swing trading, and want some guidance on what's the correct position sizes to take to minimize your risk. Okay, that's it. That's all. We'll talk to you next week. Cheers.